Beyond Meat stock just hit a 52-week low today. Share price plunged as much as 18% after it announced its Q3 earning result. The earning release made a year-over-year comparison with Q3 last year. If we compare with last quarter, the number looks even worse. Revenue and gross profit declined by 29% and 52% respectively. Adjusted EBITDA loss was 15 times more than last quarter. In this video, we will discuss the main causes of earning miss. Mr. Alpaca Business Updates. The company has missed its target by a mile. Q3 outlook was 120 million to 140 million, while the actual number was only 106.4 million. There are 5 major catalysts behind the earning miss. 1. Lower overall demand. US revenue shrank almost 14%, while international revenue grew by 142.5% year-over-year. But compared with last quarter, we noticed a drop around 30% across all the channels. The company said the decline in revenue was primarily due to weaker overall demand. On retail side, fewer people stockpiling plant-based burgers and sausages at home after they returned to dining out. On food service side, the Delta variant hit and the labor shortage caused restaurants to cut hours and trim menus. 2. Higher operating expenses. The company has increased its overall headcount levels, mainly to support the company's operation, innovation, and marketing, increased investments in marketing activities, higher professional service fees, etc. 3. High inflation rate. The increasing inflation rate has forced some low to mid-income families to choose cheaper real meat. Inflation also hits on gross profit due to higher transportation costs and warehousing costs. 4. Water damage related to severe weather. A Pennsylvania facility lost potable water for 2 weeks and another suffered water damage to inventory after severe weather. About 1.9 million was written off due to water damage at one of its plants, which mostly affected packaging. 5. COVID-19 Delta variant. Due to the impact of a Delta variant, a Canadian distributor decreased their retail orders for longer than expected as its restaurants reopened, and it had expected incremental orders that didn't materialize after one of its largest customers changed distributors. In fact, back in October, Beyond Meat has already warned investors by lowering outlook to 106 million. Share price has tanked 12% consequently. Together with the drop today, the stock has already retracted 24%. I believe the earning miss has already been priced in, especially most of the headwinds are temporary or one-time only events. Now that the company has lowered the Q4 outlook to only 85 million to 110 million, Q4 would be a much easier beat.